It's Greg Michaelowski, and this is a New York opening Forex commentary for FX Street. Today, we do have some data coming out of the U.S. The Case-Shiller 20 largest markets comes out at 9 a.m. The expectations are for a gain, actually, of 1.3%. This is a year-on-year gain, and this would be the first one since November 26. Good news for the housing market, although it's still pretty dicey situation for U.S. housing. Richmond Fed Manufacturing Index comes off the back of a better than expected Dallas index yesterday. The expectations are for this to rise to 10. This would be this line up here. Not as high as the levels that we saw at this point right here, but nevertheless better than what we've seen of late for that index. If we get that data, it should help the dollar continue its advance higher today. Consumer confidence also expect to come out, and as you can see here, this has been pretty waffling around between 45 and 58 or something like that. Expectations are supposed to be in between at 53.5. Consumer confidence still as a relation to this area, as a relation to certainly the highs for 2000, are well down, trading at the 53 range or at the 53 range versus 140 here, 100 here. So confidence continues to remain on its back here in the United States. But better at 10% unemployment, or 9.5 to 10% is not good for consumer confidence. Also, the market will be paying attention to the Greek bond situation. You can see here that how those yields have surged, and the whole situation out over there continues to be of focus here. That's why the euro seems to be pressured here today. That's definitely the case. Also, we have Bernanke speaking at 10. We have the Goldman speaking on Capitol Hill as well. We have we have ECB President Trichet speaking at 10:15, or scheduled to speak at 10:15. His comments about Greece will certainly be of interest. At 3:30 this afternoon, Bank of Canada Governor Carney speaks. Definitely something that the market's going to be paying attention to as the June, whether they tighten in June 1st or July 20th. Debate continues. Let's take a look at the euro versus US dollar. You can see here how the market has been trending to the downside here today. Yesterday's low came in at the 91 level. Currently, price trading at 98, so we're back above that level after breaking to a new low at around the 85, 86 level here. That may give the profit takers something to lean against. What I mean by lean against, they're able to buy against this old low from yesterday, which came in around 90, 91 level, and take their profit. Those people who are short, let's say against a 100 bar moving average. I like to use a 100 bar moving average. You can see the blue line is 100, the green line is a 200. The market came down, tested the 100, and then moved below that level, and then rallied back up toward this high right here that we saw yesterday, toward this high here, but held the 100 bar moving average here, and then started to move to the downside. This green line is a 200 bar moving average. When the 200 and the 100 converge, like it did at this point right here, this gives traders the lowest trading opportunity to sell against it, with the stop simply right above it. So it's about a 10 pip wide stop here, selling against that level at the 67 level. If you're lucky enough to do that, you would have had this move to the downside, breaking through this key support level at this 46 level. Why was a key? Look at this low, look at this high, look at this high, look at this high. Broke through that high, moved to the upside, came down, tested it here, moved back up, and then broke through it here. That's going to be a key level as we trade here today. Other levels that we're watching is 35 level, and this 100 bar moving average is going to start to move to the downside here, and that will be of interest to the market as well on any sort of correction, as well this level, the 22 level. The 22 level was a low level when the market started to move to the upside here. So those are the key levels on the top side for the euro versus US dollar here today, at least as I see it. On the downside, we get back below this 90 level, 91 level. We should see the market head down towards 68 level. This low is 60. These two lows are 68. That will be the target on the downside for the euro versus US dollar. Let's look at the sterling versus US dollar. That currency pair. Well, let's go to the daily chart here first. One, two. You're using this trend line, this old trend line. We broke through it here, but this trend line has maintained its dignity, I like to say. So we'll be watching this level down at 153 level in the sterling versus US on the downside. Currently trading at 153.37, so well off that level. From a hourly perspective, um, The 153.19 level, that was this gap type area that we saw a couple weeks ago. I always keep this line on the chart, and the market tends to want to remember it, come up to that level, then we come back down to the level. So this is what I call a remembered price. Market remembers those levels, and we did find some support against that old level, against this these old lows, these old areas where the market did find support, and that's what we did. Found it again here today. So we're going to watch 153.19, 153.07, 61.8% retracement of this move up from this low to this high, 61.8. This whole area is going to be our level of support here for the sterling versus US dollar. We break through that level, we should see lower levels for this currency pair. Got to get through that level on the downside. On the top side, 50% retracement of this. The same move comes in at 153.43. The market has been having a little bit difficult time up at that level as well, so we'll be watching that. If we break through that, then we're going to probably head up to the 65 level. The 65 level, that was this Friday's low before the gap lower at this point right here. So we'll be watching those levels on the top side here for the sterling versus US dollar. Let's go to the Japanese yen finally and take a look at that currency pair. Today we came down again. The 100 moving averages, always a blue line on my charts, come down, test the 100 bar moving average here and to the T, and the market bounces off that level. That 100 bar moving average, the blue line in the chart, currently comes in at 93.60. We'll be watching 93.60 here. If the market breaks to that 93.60 level, the next target would be this 38.2% retracement. This 38.2% retracement comes in at 93.29. That would be our target on the downside if the market can break this blue line. If it can't, then look for further momentum to the upside here, with 92 being our level that we'd be interested in watching up here. You can see how that level corresponded with that initial low. Actually, I wanted to do this in yellow so you can see it a little bit better. Oh, I did it again. I'll highlight it in yellow here. This 93.92 level is where we're going to find some resistance. You can see we already found it last hour when it came up to that 93.92 level, and that market stopped. Dollar Canada, I spoke about the Bank of Canada's Carney speaking later on this afternoon. What's the significance of this? Well, we just broke through the 200-hour moving average. The 200-hour moving average currently comes in at the par 33 level. Other levels of importance, par 60. Par 60 is my key level. Let's go to the daily chart. Look at this low right here going back to March 19th. That was par 60. The market remembers those lines, and you can see as you go through time, we came down to that level. We used it as resistance here. Even though the market got above it level here, we could not close above it. The last time we tested it was this time right here when the market moved through it. It moved through it. When the market moved back through it, it moved back through it. Came back, tested it 2 days ago, and back up there. Looking at it again as market trades 47. What happens at par 60 is going to be key for me here today. If we break above the par 60, we should see higher levels in that currency pair. Perhaps getting the next target is 72, and really 101.05 would be the next target on the top side. So I don't expect to see continued momentum to the upside, especially with Carney speaking this afternoon. But we are getting some short covering as we speak, as it heads toward that par 60 level. This is Greg Michaelowski for FX Street. Have a great day with your trading. We'll talk to you later. Bye-bye now.